Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar remains under bearish pressure as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, refreshed its 6-week high of 102.50. This comes after the US Labour Department exceeds expectations, showing strong job growth and a decline in the unemployment rate to 4.1%. The stronger than expected US job report, with 254,000 jobs added in September, has reduced expectations for an aggressive Federal Reserve rate cut, shifting the focus to a modest 25 base point rate cut in November, as hopes for a soft landing grow. Investors are focusing on key inflation reports this week, including the US Consumer Price Index, or the CPI, and the US PPI, the Producer Price Index. Along with that, we get the US FOMC meeting minutes also. So turning to the technicals, we can see the market is now getting close to the 60-day simple moving average. So around 68 figure 30 may find initial support and therefore may find a bounce or demand returning and seeing a short-term recovery. We are getting close to an oversold condition from the RSI and therefore warrants a potential bounce. Looking to the top side, resistance comes in around 68.75 to 69.15 and reassess from there. The euro crushes the level of 110.20 and now puts further threat to the downside as it looks towards the level of 109.40.55. A break there would give further scope and towards 108.80, but do note that the technicals are somewhat oversold, but the ADX is still holding to a bear trend. Any bounce from 109.40.55, if it holds, then we will look into the top side challenge where it was recently breached at 110.10.20. After a strong surge in dollar yen, the market's finding a little bit of profit taking coming back into play here as the resistance at 149.15.25 holds. Looking to the day though, the market is finding a little bit of difficulty here, so we may find a small pause to the bullish bias at the moment and look for a pullback. But I feel this might be short-lived, anywhere towards the region of 147.60. If so, the market may find a bounce and look towards that top side, but I feel the market may be now getting close to the top around 149.15.25 and therefore eventually see the turnaround back towards the bottom side here of 145 in the broader view. The British pound still remains somewhat weak and now challenges its next level of 130.05.15. The technicals are oversold, but there's still pressure here that could see some further stop losses and look towards 129.60 before any reversal in its current pattern and look towards 131 as initial target. Having posted 3 consecutive candles to a doji now represents a tri-star pattern, which suggests indecisiveness in the market, which could indicate a potential reversal. And if the bearish sentiment continues, this pattern may signal a short-term downside correction if we see a break of 2,636, which would expose the region of 2,600 and reassess from there. This pullback may be short-lived from the 2,600 and see a bounce and look back towards its broader call of 2,700. Wrapping up with oil, another strong day. As we can see here, the market is getting very close now to the call of $77 a barrel. However, we see a break of 77.40. This may ignite further move to the upside and look towards 78.60 or even up to 79.5 and reassess from there. Any pullback likely to be shallow and finding support roughly around 75.85.95. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report and I hope you enjoy the great start to the day.